Greetings everyone, Joseph James here from theschooloftrade.com. Today was March 2nd, 2010. Here's your live trade room recap. Now before we talk about the trades we took today, guys, I want to remind you guys there's 3 important links on the YouTube video in the description of the video, guys. The first one's for our blog. We just posted a brand new article on the dollar index trading on the blog. We got our 3-week trial and our 12-month track record. So 3 important links, guys, in that description of each and every video. So make sure you guys click on that. Let's see here, 2, 4, 6, 8, 9 total trades, guys. Pretty busy morning. We had about 40 in our pot before we hit the big winning trade. Biggest trade of the year so far, 1046 on the goal. We'll show you guys what we did on that one. But of course, 1320 in, 132 ticks in. That's $1,500 for the week, guys. That's 20,500 USD for the year of 2010 so far, and we're up above $700 per day. We'll keep you guys posted. And what's the most important thing that happened today? Well, there wasn't much news events this morning. We didn't have very much besides 9 o'clock. We had the Bank of Canada rate announcement. So there wasn't very much as far as news events to go. So the market was wide open. We really had to wait for the volume to step in this morning because when we opened up our chart this morning, we noticed right away everything was moving very slow. Red pace of the tape, flat trigger lines. So we had to wait for the volume, wait for the speed of the tape to confirm, right? And don't forget to pay attention to that dollar index. Now today, we really saw the dollar index prove its worth for us today because a couple trades we took were directly correlated to the dollar, and a couple trades we avoided because we knew that there was some resistance on the dollar which was going to provide support on the gold and crude. So we watch out for the major support and resistance levels on the slope charts, watch the speed of the tape, the pace of the tape in the dollar, and that will tell us a story of what to expect on the other markets we trade. And again, remember guys, we have a great article on the blog, that's schooloftrade.com/blog, and that link is in the description of this video. Now, when it comes to the dollar index, guys, we looked at it a couple times today. Now, here was a great example, guys, in the dollar here. We compared the dollar to crude. Now, as you guys know, what is support on the dollar will become overhead resistance here on crude. So look on the dollar, left-hand side of your screen here, just above the 86.05 level there. Notice how we have lots of support here, right? Lots of support there. Then you come over here to the crude here, and we see we have lots of overhead resistance here, all right? Support on the dollar, resistance overhead on crude. So in this case, we were looking for a 2-step pattern alongside, or a breaker pattern along, whichever you want to call it here, on the crude in the right-hand side here, looking for a break to the upside, but we knew to stay away, and you can see just how choppy it was there because of that support on that trend line on the dollar in the lower left-hand corner. Okay, so that's one great example of how we use the dollar today. Another one came, though, today, kind of a better example here, was when we actually used the dollar correlation to get into a trade, right? Now the example we just gave you was when we used the dollar correlation to avoid a trade. But now, the dollar here on the right side now, you'll notice how we had, right? Notice how we had in the dollar, we had a break below support. Right? Once we broke below that level of support there, follow me over here to the left now, you'll notice we saw the 2-step pattern long work. Okay, now we used this same technique on a trading gold today at 1045, and this is going to become a brand new pattern for us here in the room. It's using the breaks of the dollar index to, of course, qualify entries on my gold or crude. So a great example of how dollar broke support. Then, of course, the crude breaks resistance, and there comes our 2-step pattern long. So we can use dollar to get into a trade, we can use it to avoid a trade. Let's take a look at how we did today. 9 total trades here, guys. First trade of the morning was 935 here on crude. Now, this was a 2-step pattern, so, of course, a counter trend pattern here on the crude. Short-term trend was up. You can see that by the slope of this trigger line here. We, of course, were looking for a breaker long, right, above this high here, 79.35, 79.36. We never saw it, though, so we take the break below the swing low for a counter trend 2-step pattern short. 9.35 was the time, 79.26 was the fill. We got our +4, move our stop to entry +1. We got stopped at +1, as you can see, it then came reverse right back around us and head back to the upside. But that was after we had already taken our profit for $100 or 10 ticks out of the market for our first trade here on the crude. That was at 9:35. Next up on gold is 10 minutes later here, 9:45. Notice these are all after the U.S. Open, guys. These are all post-U.S. Open at 9:30. Okay, so here again, now 9:45 on the gold. Short-term trend is up. Same looking pattern here. We, of course, had the short-term trend is up. That trigger line there tells me we break above this red line here. We make our swing high, and then we break above that swing high for the breaker pattern long. Now, notice a couple things here. The first thing is we have the high of day overhead, right? The high of day here is just kind of staring us right in the face there. Now, with the high of day, what are we usually thinking about? short side, right? High of day, bouncing off the high and coming back down. So this was one of those trades where we really weren't going to let this thing go against us very far before we decided to pull this trade off the table. And that's exactly what happened. At 9:45 here, this breaker pattern long, again, breaking above this swing high here. Notice how choppy it got though. Right? Notice how choppy it got around that open there, around the entry there. Okay, 25.1 was the fill. Once we saw things start to slow down and get really choppy there around that entry, we knew, of course, again, with that high of day overhead, we expected this thing to reverse down against us because that overhead resistance stop move to entry. Once we didn't see things really moving the way we wanted to, momentum curled, of course, and pointed back down. If you follow me down here, guys, momentum, of course, then curled and pointed back down. That didn't help me out very much. It told me right away, get out of this trade, Joe. Stop up to entry +1. We got taken out at a scratch for nothing in and nothing out here at 9:45 on the gold. Next up as well, 10 minutes later, 9:56 on the gold. Remember, guys, we didn't have much news events at all after 9 o'clock this morning, so everything was pretty much wide open. Now, we had two back-to-back trades here on gold. First trade was a two-step short. Second was a continuation. This is a great example, guys. Notice with the high of day up top. High of day all the way up top here. With the high of day there, we start cruising towards the high of day. We hit this overhead resistance, guys, at 28.8 on the gold. 9:56, we mark up our swing low here. We break below that swing low, and of course, there's your two-step pattern short. 9:56, 28.1 was the fill. We took our +4 target, stopped to entry -1, got locked up at -1 for 10 ticks or 100 USD. So that was our first trade of the day, or first trade of this pair here at 9:56 on gold. It gets us 10 ticks. Now, this was the trend reversal pattern. Okay, now of course we had the short-term trend was up, trying to break above this high of day here. We're always looking for reversal off the high. Now, a two-step pattern is going to reverse the trend. Now we're headed back to the downside. But now we can start looking for a trend continuation pattern, such as the breaker pattern. We break below this red line here at 27.5. We make up our swing low, and we break below that swing low, and there's your entry for the breaker pattern short. Only about 7-8 minutes later on the gold here, 26.8 was the fill. We got our +4 target, move stop down to entry -1 to lock out all the risk, lock up one more tick of profit. We got our 10 ticks or $100, and there's your back-to-back winners. So $100 at 10.03 on the breaker short with the trend, $100 at 9:56, counter trend. And guys, at this time of the morning, my exact words were, we will continue to take these small winning trades here, guys, all morning long, because these small 10-tick winners will add up to big profits at the end. And my exact words were that, guys, I'm going to take 4 or 5 trades every day. 3 or 4 of them will be small winners, and all I need is that one big winner to make my day, make my week, make my month. It's all about taking the high-quality patterns. It's those high-quality patterns consistently executing according to our rules, where we're going to see consistent results. Not every trade is going to be a big winner, and this is a great example of it here because we're still chipping away, right, 10 ticks at a time. But hopefully one of these trades, and we'll see later on this morning, will end up being that big home run trade. Guys, and that's the way traders operate. We take small, of course, conservative entries, and of course we let those entries run in potential having some big winning trades. So we're patting our pockets with these 10-tick winners. Same thing continues here, guys, on the crude just before 10 o'clock now.